What's the most expensive thing you'll ever buy but never plan for? It's not a house, it's not college, it's your own health. One ER visit, one surgery, one hospital stay. And suddenly you're staring down $50,000 in medical bills. Sometimes more. That's not a worst-case scenario, that's America's normal. This isn't just about healthcare, this is about finance, money, debt, and the slow financial bleed that's destroying American families from the inside out. Before we unpack the hard truth about medical debt and how it's quietly reshaping our economy and our lives, do one thing. Subscribe to The Financial Scoop. We break down the facts that mainstream media skips, and this one's personal. So, drop a like if you've ever felt your wallet tighten at the thought of getting sick. And comment below, how much do you think a single night in a US hospital costs today? Stick around, the answer may make your stomach turn. Let's get into it. Medical debt is the #1 cause of bankruptcy in the United States. Not student loans, not credit cards, not even mortgages. According to a study by the Kaiser Family Foundation, over 41% of American adults carry some form of healthcare-related debt. That's roughly 100 million people. For context, that's more than the population of Germany. We're not talking about people skipping luxury treatments. We're talking about families going into debt just to stay alive. What does that mean in real numbers? The average unpaid medical bill in collections is around $800. But it's not the one big bill that crushes you. It's the stack. It's the ambulance ride that wasn't covered, the surprise out-of-network specialist, the emergency room charge that looked like it was in your insurance network but somehow wasn't. This is death by 1,000 financial cuts, and even for people with insurance, the system is a minefield. Here's the kicker. More than 60% of people with medical debt actually had health insurance when the debt was incurred. That means premiums aren't protecting you. They're barely disguising how broken the system is. In 2025, the average American family pays nearly $22,000 a year in health insurance premiums and still ends up owing thousands in deductibles and out-of-pocket costs. Want a quick example? Let's say you break your leg. You go to the ER, X-rays, orthopedic consult, a cast, and a follow-up. With decent insurance, your out-of-pocket cost might still hit $5,000 to $7,000. That's a used car. That's a semester of college. That's someone's entire emergency fund wiped out by one accident. Now imagine you don't have insurance. That bill could easily cross $25,000. And if you can't pay, welcome to the American debt trap. Because now it's not just a hospital chasing you, it's debt collectors, lawsuits, wage garnishments, even credit score damage, which ironically makes it harder to afford insurance, qualify for a car loan, or rent an apartment. Let's pause here for a quick pattern disruption. Think about this. If a family of 4 has a medical emergency and goes into debt, they're not just financially impacted. They start making decisions differently. They may skip future checkups. They may delay filling prescriptions. They may avoid urgent care when it matters most. This leads to worse health outcomes, higher long-term costs, and an even deeper reliance on credit. It's a vicious cycle. One illness triggers debt. That debt creates avoidance. That avoidance leads to worse illness. And the spiral continues. This isn't just a health issue, this is a financial policy failure, one that affects everything from productivity to consumer spending, from mental health to economic mobility. And let's be clear, this crisis doesn't just affect the uninsured or unemployed. Middle-class families are increasingly vulnerable. A recent study showed that 72% of those with medical debt were employed when it began. These aren't people sitting at home. They're people with jobs, with benefits, who are still financially drowning. In fact, more employers are offering high-deductible health plans which shift more cost burden to employees. That sounds great for the company's bottom line, but for workers, it means having to choose between treatment and financial survival. Let's zoom out for a second. What happens to an economy when millions are using credit cards to pay for insulin? When parents are crowdfunding cancer treatments? When 1 in 5 Americans is delaying medical care due to cost? Here's what happens. Economic stagnation. Families don't spend, entrepreneurs don't take risks, young adults don't buy homes, retirement accounts don't grow. Instead of building wealth, people are extinguishing financial fires. And when you extinguish fire after fire, eventually you run out of fuel. We're already seeing this. Credit card debt has hit over $1.3 trillion, and a huge chunk of that is medical related. Combine that with rising interest rates, and people aren't just paying off procedures. They're paying interest on a broken system. Want another gut punch? Medical debt doesn't expire easily. It haunts credit reports for years, impacting your ability to borrow even after you've paid off the balance. Some states are just now starting to ban reporting medical debt to credit bureaus, but it's too little, too late for the millions already damaged. Even worse, some hospitals are suing patients directly. In certain counties, local hospitals file thousands of lawsuits per year, often over bills as low as $1,000. These lawsuits disproportionately target working-class families, many of whom never even saw the bill coming. That's not healthcare, that's legalized financial warfare. Let's talk about the psychology of medical debt. It creates shame. It creates silence. People are afraid to talk about it. They avoid family gatherings, they screen calls, they stop opening mail. It leads to depression, anxiety, and relationship breakdowns. And yet, no one blames the system, they blame themselves. That's by design. Because if you're busy feeling ashamed of your bills, you're less likely to challenge the rules that created them. This silence keeps the cycle alive. And that's exactly what the system wants. So what's the solution? We can't fix this overnight, but here's the truth. Financial literacy isn't enough. Budgeting won't help if a hospital stay costs more than your annual salary. What we need is policy reform. Caps on out-of-pocket expenses, transparent pricing, and a real safety net for medical emergencies. Until then, here's what you can do. Build an emergency fund. Even $500 can make a difference. Read every insurance policy like a contract, because that's what it is. Negotiate bills, ask for itemized charges, challenge denials, and most importantly, talk about it. Break the silence, because this isn't a personal failure. It's a national emergency. According to the Kaiser Family Foundation, more than 100 million Americans live with some form of healthcare debt. That's nearly 1 in 3 adults, spanning every age group, income bracket, and insurance status. What's more disturbing is that a large portion of this debt isn't caused by major surgeries or rare illnesses. It's everyday care, urgent care visits, prescriptions, lab work, and emergency room copays. Even with health insurance, families are finding themselves underinsured, paying high premiums only to be hit with massive deductibles they can't afford. Meanwhile, medical debt has quietly become the largest source of personal debt in the country outside of mortgages, outpacing both credit cards and auto loans. It directly affects credit scores, limits access to future borrowing, and forces millions to delay buying homes, starting businesses, or even saving for retirement. The ripple effect touches every area of economic life. What we're seeing is a slow and quiet redistribution of wealth from the middle and working class to the healthcare and debt collection industries. And behind every number is a family choosing between chemo and college savings, insulin and groceries, an ER visit and rent. Medical debt isn't just a financial issue, it's a structural flaw, embedded into a healthcare system that treats emergencies like business opportunities and leaves ordinary people with the tab. As long as profit takes priority over patient care, we'll continue watching the most vulnerable Americans go from healing to bankruptcy. And that's not just unethical, it's unsustainable. If this episode of The Financial Scoop helped you see the system for what it is, not broken but rigged, then it's time to act. Like this video so more people hear what the mainstream won't say. Subscribe if you want the facts, not the fluff, and comment below. Have you or someone you know ever had to delay care because of cost? Let's put stories to the stats, because this crisis isn't about numbers, it's about people like you, like me, like everyone, just one accident away from financial ruin. And until that changes, no one is truly safe from the medical debt trap.